Hi, this is James Sugg with Westpac London's End of Day report for Thursday, March the 21st. Well, markets are down today. Some pretty decent economic data, particularly out of the US, wasn't enough to prevent European concerns from driving markets lower. In Europe, we had the advanced reading on the PMIs for March. The factory PMI was weaker, the services PMI was weaker, so the composite PMI fell from 47.9 to 46.5. That's for Euroland as a whole. The national detail that we've got in these advanced reports included a new cycle low for the French services PMI. It's actually only just above the level it fell to during the depths of the 2009 recession. But also the German factory and services PMIs were lower, including a dip back below 50 for the factory PMI there. So the German data looking a little bit softer as well. Still, there's a decent chance German GDP will post a positive for the first quarter, but maybe just a little bit less likely than it seemed before those figures came out. We had UK retail sales up 2.1% in February, but that was a bounce from the snow-impacted January data, and that'll almost certainly reverse when the March figures come out. Quite a bit of other data, but the highlights in the US were existing home sales up 0.8% in February, on top of a similar size gain in January. Basically, there's a lack of supply of decent homes now for sale. That seems to be constraining sales there. Nevertheless, they still posted back-to-back rises. The Philadelphia Fed Factory Index rose from minus 12.5 to plus 2 in March, its first non-negative reading for the year so far. Leading index in the US up 0.5% in February, its sixth non-negative reading in a row. Initial jobless claims up just 2,000 to 334,000 in the latest week. So the last 2 weeks, actually the two lowest readings on that series since early 2008. If you exclude 2 weak readings or low readings in January, which we think were related to seasonal adjustment distortions, whereas there were no obvious factors holding claims down in the latest readings. So that's a sign that the labour market's doing better in the US. But as I say, despite the decent US numbers, markets are lower. And I'll give you some numbers on that. At the close, the London market down 0.7%, the French market down 1.4%, we've got losses of 0.9% and 0.8% in Germany and Spain respectively, and the Italian market's down 0.5%, and the Dow is down 0.5% at the New York lunchtime. We're looking at 14,443 for the level there. Commodity prices are lower with oil down 1.2%. That's at $92.36 a barrel. Copper prices off 0.33%. The exception is gold. It's up 0.33% at $1,613 an ounce. The Aussie dollar, it's at 1.044 against the US dollar at the moment. It's actually stronger today. The traders are telling me that it's actually more of a New Zealand dollar trade with the decent Kiwi GDP numbers yesterday or last night boosting the Kiwi and the Aussie riding higher on the New Zealand dollar's coattails. Right, back with more tomorrow.